The European markets have just opened. They've opened in the green, in large part taking strength from what we are seeing play out in Asia today. Paris is up about 0.2%. Frankfurt is flat. It hasn't opened as yet. It should open in a short while from now. And the FTSE in London is in the green. Portugal, some of the other key markets in focus really. Portugal is in the green, up by about 0.8%. And Paris, that's Paris for you, which is up about 0.25%. But let's get a sense of what the outlook for trading today in Europe is. We've got James Ashley, who is senior economist at RBC Capital Markets, who joins us on the show. James, what would you say the focus of the markets today would be? Would it be the Italian bond auctions?
Yes, I think that's exactly the thing that market we're focusing on. Obviously, over the past couple of weeks or so, we've seen a risk-off mode. Yesterday, bond spreads came back in a little bit, partly on the back of the comments from an ECB executive board member suggesting that this ECB securities market program might be relaunched to use in terms of purchasing Spanish and Italian paper. What that's meant is that there's a bit more of a risk-on sentiment. Markets have been trading a bit more positively yesterday, and we would expect the same again today to some extent, although I think really how that Italian auction goes will be the key bellwether. At the same time, we do have a few interesting data releases coming out. We've already had upside news on French inflation today, and later on in the European morning we get European industrial production figures where I think there's scope for upside surprises there. So we could get a relatively positive trading session, I think, out of Europe today.
James, how do you believe the ECB's comments that you spoke about saying that Spain's debt is not justified and that the bond buying program is available as an option will do to calm investors' nerves? And what are you expecting from the 3-year Italian bond sale?
I think in terms of the Spanish story, I think at the moment yields probably aren't high enough to force the ECB into the market, but if we do see any further aggressive widening from where we are right now, I don't think it would take too much more for the ECB to step back in again. It clearly doesn't want to do that because it doesn't see it as being its job to bail out the European sovereigns. It sort of thinks that it's lender of last resort for the banks, and that's what it's done with its LTROs, and it's going to maintain a monetary policy very accommodative, but it doesn't really want to use the S&P unless it has to. So I think they're there trying to talk about using without actually having to step in and pull the trigger, and therefore at the moment they're probably not going to come back in, but if yields widen out and market sentiment takes another turn for the worse, then it's certainly a possibility. In terms of the Italian auction, I think this is really quite a key bellwether. I would expect it to go away reasonably well because, as I say, over the past 24 hours or so we have seen a more positive market tone, but at the same time I think it'll be the cue that really determines how markets trade over not just today but over the remainder of this week.
Right, and lastly, James, yesterday we had a board member of the European Central Bank trying to play down concerns over Spain, saying that the market's fears over the country's economy were a little exaggerated. But is that something the markets would go with, or do you believe that Spain really is a very big concern?
Spain's macro fundamentals are clearly fairly poor. If you look at where the labour market is, you have youth unemployment over 50%, total unemployment over 23%. If you look at the growth dynamic, then we're looking at a fairly deep recession this year. We're looking for contraction of well over 1%. So whether or not market expectations are overdone really depends